please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to one of the most erudite guests we had as part of our Rising India Summit, Nobel laureate and economist Paul Krugman. Professor Krugman, thank you very much for this special chat with us.
Well, thank you for having me.
Okay, well, we all know you through your columns. But, you know, for the Indian audience, the first question that we would ask a person like you is, interpret President Trump for us. Extremely confusing, sudden tweets. How should we understand him?
Well, I mean, you know, I have no professional expertise in his personality issues. He's a very impulsive. He's never actually worked in anything except the family business. He never worked for anybody except his father. This rich kid, never always had his own way. I think the thing to understand for global politics and so on is that his vision of the world, such as it was, is the way the world was 50 years ago, you know, when he was a young man, and he hasn't caught up with this modern globalized world that we live in.
Okay. No, I'll tell you, on a more serious note, the point is, you know, he did come with promises to a certain category in America, people who had lost jobs, to, you know, the shifting of manufacturing to China. But a lot of people thought that he won't implement those tariffs. But as time passes, he has remained true to all those election promises, and what looked like impossible is actually coming true.
Well, a little bit of it has. Now, we still don't know. I think he probably doesn't know whether these are, he's doing a few dramatic things to make it look like he's doing what he said he would, or whether this really is the start. I mean, you know, America, even America, big country, but we're still very embedded in this global economy. There's no such thing as a U.S. product. Everything is a global product, and business doesn't want to see that disrupted. And that's a counterweight. On the other hand, yes, he made a lot of promises. Basically, that I'm going to bring back the manufacturing jobs that we had 40 years ago, which is not going to happen, but he may be tempted to try some extreme measures to do that, and the steel tariff was certainly a start in that direction.
Okay, so, you know, the big deficit is really with China, and there are official statements from the administration, $375 billion of deficit with China. They want to bring it down at least by $100 billion, and $60 billion already probably announced as, you know, happening shortly. Where does this lead? Retaliation for sure from China?
Okay. First, I'm not... I think one thing they're going to find out is that the deficit with China isn't really a deficit with China. I mean, it's a deficit with a sort of whole of Asia, because Japan and South Korea send components to China, which are then shipped. And so if the U.S. gets into that confrontation, it's going to find that it's actually very much at odds with a whole group of Asian economies. It's not a U.S. versus China thing. And I don't know. I mean, the Chinese would surely look for some retaliation, but it might be more that they try to get other Asian economies to participate. And I think the more looming trade conflict right now is in a way going to be with Europe, even though there will be fighting with China as well, but it's going to be on both sides. And they're going to find some unhappy lessons. You know, the U.S. is, people can get hurt on both sides. And you know, there are things that we worry about, not just loss of markets, but loss of supplies, components. You really would not want to run the U.S. electronics industry without components that are coming from China.
Okay. Well, just one more question on this, and then I'll get to other continents as well. You know, we have a happy picture of the global economy and global financial markets. There is growth, there's falling unemployment, and financial markets have been doing very well. In 2018, can that get disrupted because of trade?
Well, sure. I mean, there's a lot of money invested everywhere based upon an open world economy. And if you suddenly start to change that, I mean, a lot of the discussion has been, well, how many jobs you're getting, but what about value? I mean, every time that it looks like we're teetering closer to a trade war, stocks go down, and stocks fluctuate for all kinds of reasons. But there would be a lot of bad debt out there if companies that borrowed money based upon the global system as it is saw that system disrupted. And then, of course, we worry China could very well be a bubble waiting to pop. This could be what pops the bubble. So yes, this is a trade war is not a happy thing.
Okay, I'll come back to this bad debt and possible interest rate hikes in a minute. But since you spoke about China and retaliation, the other personality in the whole picture, Xi Jinping, now probably selected or elected or nominated for life. How do you read this China?
Well, it's upsetting in a couple of dimensions. I mean, look, China is, depending on your measurement, either the second or the biggest economy in the world. It's a centerpiece of the global economic system. It's a huge part of international security, like it or not. And we need a China that is a reliable partner. And one-man rule is not how you get reliable partners. You never know what may enter that man's mind. And so this is a bad thing. China needs to make a big transition, too. China cannot continue to do its economy the way it did. There are things you can do when you have a huge reserve of underemployed peasants that you can put to work and you can grow at 9 or 10% a year. You can't keep on doing that. You need to adjust. You need to become more mature. Is a man who has been in power for many years and is going to be in power forever the kind of man to lead a reform effort? And again, probably not. So all of this is bad news for all of us. I mean, we had hoped that China was evolving into a more mature political system.
But, in 2015, 16, end of 15, early 16, we almost were scared about the way China was dumping, and the yuan looked like it could fall, and the reserves flowing out. Do you think 2018 holds any kind of danger from China?
Well, there's always. I mean, the Chinese situation has looked unsustainable for 7 or 8 years. Now, of course, the problem is maybe the fact that it's gone on so long means that we're wrong about it being unsustainable. Yeah. That could be true, but it still looks as if they have too much investment, too little consumer demand. They keep it afloat with this constant wash of credit. There was a period of capital flight. They cracked down on the capital flight, but it's probably still a lot of pent-up desire of money to get out of China. When one of these days, reality probably will catch up with them, and it's going to be nasty.
Okay. Well, we have to take a break, but when we come back, I want to ask Professor Krugman his impressions of Prime Minister Modi. Welcome back to this special chat with Professor Paul Krugman, our special guest, the most erudite lecture we had as part of the Rising India Conclave. Well, Professor Krugman, your impressions of Prime Minister Modi. He's been one of the prime ministers with the largest majority, and he came with proven executive talent after having headed a state and led it to reasonable progress in 10 years.
Yeah. So I am in the position. I'm a American liberal, and obviously. Won't come as a surprise. Some things about Modi disturb me. He's a Hindu nationalist. He's in some ways comes across as conservative on issues where I think we need more openness. On the other hand, he's shown himself to be a reasonably innovative, effective economic leader, willing to do stuff. It makes significant investments, especially on behalf of the rural poor. This may seem a little strange. He reminds me a bit of Shinzo Abe in Japan. Okay. It's a country at a very different level. But Abe also is a nationalist. In many ways, one thought of him before as being a right-winger, and in some ways he is, but not in a Western scale of things, and has also turned out to be an innovative economic reformer, has also turned out to be willing to do things in surprising directions, like trying to empower women in the labor force, not what you expect from a conservative. Yeah. So, look, it's a little... There are things that I'm certainly not going. I'm not going to do a political endorsement one way or the other. But Modi is clearly a smart guy and a forceful guy, and his economic policy, while it has included some odd things like demonetization, has clearly, on the whole, been an intelligent one.
Okay. All right. In spite of demonetization.
In spite of demonetization, okay. That I wouldn't.
I'll come back to that a little later. But you know, he has tried to make India, you know, a manufacturing country. Make in India is one of his yeah. pet theories. Do you think we can get it right? We missed the bus when the Asian tigers and China got into the global manufacturing cycle. What should India do now? Can we get into the cycle now?
I think India can. I mean, now in some ways, the success of Indian service exports worked against manufacturers. It has kept the rupee stronger than it would otherwise have been. And it means that India has not been as cheap a place to produce as you might have expected. But on the other hand, India has this enormous wave of people coming along, so it needs to employ them, and India still it has reasonably low wages. Productivity is low, but not as low as some other places. I think infrastructure used to be a big issue, transport infrastructure. It's gotten better. Yes. Still not first class, but it's better. So why not? I mean, you have neighboring economies that are major manufacturing centers. They're even poorer than India. But there's this. I would say, let's put it this way: a successful Indian future would include a lot more manufacturing, being part of this global manufacturing system. Okay.
What about services itself? We clearly have an advantage.
Right.
And yet a large part of India is also worried about the way the US, for instance, behaves with visas. The Indian sector hasn't yet been threatened. The first visa attack came on the Middle Eastern countries for other reasons. But, I mean, can this services-led export model continue?
I think so. The visa issue, there's actually been a sharp drop-off in student visas for Indians, and that's into the U.S., which is utterly stupid from our point of view. Now, for one thing, is we don't know how long this continues. The U.S. may return to a little bit more sanity on these issues. But I don't think that the immigration issue is necessarily that central. India has now a large, when we talk about China, we talk about there's a kind of industrial ecology that supports their manufacturing. India has a kind of service ecology that supports the service sector, and the range of things that can be done here continues to expand. Okay,
so you do think that it can be a services-led growth or services exports-led growth? That's possible.
Yes. I mean, we've been talking for some time about how a much wider range of services can be potentially traded. I think that will happen. It's happening a little more slowly than people thought, but then India is very well positioned to take advantage of that.
Okay. Well, let me come to your caveat when you were admiring or when you were describing Mr. Modi's policies. Demonetization. What are your impressions?
He wanted to do, I mean, I don't have any inside information, right? But abruptly trying to, I mean, the problem of dark money, of black market, that's a real issue. But in going after this with this very crude, this blunt, we're going to take these bills out of circulation, was highly disruptive. All the indications are that there were a lot of people doing perfectly legitimate business who found that their lives were upended. I have to admit that India bounced back from that disruption quite quickly, but still, this is not how you do economic policy. If you want to deal with corruption, then you have to have systematic, sustained measures, not a one-time, let's pounce on these people, catch them by surprise. So this is, all right, well, appears to have not done too much harm in the longer run. But that was not an encouraging move.
Okay, you don't see too many people emulating this policy.
No, I don't think so. I mean, it would be interesting. I mean, if the U.S. were to do a demonetization of $100 bills, that would get a lot of black money. Or the Europeans were to do the 500 euro note. There were no legitimate uses for that. So, but here this was catching way too much legitimate business.
Okay, all right. Let me come to the American economy itself,
Right.
and the way we may get affected. You know, this current account. How will the Fed approach this going after higher tariffs or going for higher tariffs? Higher tariffs would necessarily mean higher input costs. So can the Fed raise interest rates faster this year?
I actually think that the trade policy is going to be a relatively minor factor. The fiscal policy, definitely. I mean, the bigger deficits, the tax cut is putting some, as people at the Fed say, that the headwinds have turned into tailwinds, and that's going to make them raise rates faster. Tariff policy, that's interesting. It's going to actually be very tricky for the Fed to assess this, but the tariffs that Trump has imposed so far are actually, they probably, in their direct effect, they probably destroy more jobs than they create. Right? You put a tariff on steel and you have some more people employed in steel, but you have fewer people employed in cars and everything that uses steel, which means that they don't actually act as an expansionary force on the economy.
Okay.
They do raise inflation, but they raise inflation one time. It's a blip. And the Fed always thinks in terms of core inflation, underlying inflation, and they will, I think, discount any inflationary impact from the tariffs. That in itself won't cause them to raise rates.
Okay. Okay, let me come to another, maybe more technical issue. The tariff policy or raising tariffs actually tries to bridge the current account deficit, which is investment minus savings.
Yeah.
Okay, but fiscal deficit is also rising in the U.S., and that is dissaving more deficit. So isn't it contradictory?
No, because the tariff policy won't actually do that.
Okay.
I mean, the U.S. is set to have a widening current account deficit. In fact, it does. You can see that the trade numbers are gradually deteriorating.
Okay.
Now, the only thing that's been, I mean, the dollar is not up as much as you might expect given the tax cuts, but that's probably because other things are happening in the world as well.
Okay.
In fact, I think the economic recovery in Europe has been basically dragging up the euro, even as the U.S. deficit trying to drag it down. So, but by and large, yeah, I mean the trade policy is not a major factor in current account deficits, and fiscal policy is.
Okay.
So the policy that matters here is the tax cuts.
Okay, all right. And so you expect, because of the tax cuts, the Fed may be called upon to raise taxes, raise interest rates faster?
Yes. I mean, that depends partly on how much the tax cuts actually boost spending. And what we're seeing right now, as far as we can tell, is that investment is not rising. Okay. It's all really showing up in stock buybacks, but higher stock prices do lead to increased consumer spending, so there will be some expansionary impact. And I know that the people at the Fed, they're watching, you know, they're poring over the numbers month by month to see what's going on. But if they see a significant economic boost, they're going to say, well, we're already at 4% unemployment, we need to raise rates faster.
Okay. Well, just one last question on this. So should we be prepared for some kind of asset bubbles getting burst or something as the interest rates rise?
Yeah, when I talk to people, now there's nothing as obvious as the housing bubble was, you know, 10, 12 years ago. There are some areas within the United States, there's some kinds of consumer debt, student debt, automotive car loans, which look vulnerable to an interest rate rise. There are a number of emerging markets, not India, but a number of markets, Latin America, where it looks like business has borrowed quite a lot in dollars and is vulnerable to this. So we could be seeing a fair bit of froth, smaller bubbles bursting as a result. And if there's a big one out there, it's one we haven't seen, which doesn't mean it isn't there. But I don't. Some of the people I talk to, smart financial people, are seriously worried that the world is not ready for higher rates from the Fed. So, and I take their concerns seriously.
Oh, okay. Well, but in the midst of all this, there's Larry Kudlow who's joined, and his first statement was he wants a strong dollar.
That was awesome, in the worst way, on at least two levels. First of all, he's going to work for a guy who's obsessed with the trade deficit, and a stronger dollar, of course, makes the trade deficit worse. But the second is there is a rule. It's not, it's not a constitutional amendment, but there's a very strong rule in the United States that statements about the dollar should be made only by the Treasury Secretary. Governments should speak with one voice on currency policy. That voice is the Treasury Secretary. Our Treasury Secretary is not very smart, but still, he should be, anything like this should come from Treasury. And Kudlow, has no business commenting. He's not even in office yet, right? And no, this is everyone I know is just sort of saying, I can't believe this is not how we work the U.S. government.
Okay, my final question to you, therefore, is global. I mean, we've had a great period of last 18, 24 months of global growth and global financial markets. Is that in danger as you look at the next 12 months?
Yes, I don't see anything drastic happening. But if we look at the U.S., even though we're not seeing really inflation, the U.S. has to be running out of room. Our labor markets are starting to look tight by many measures. China, I just worry about. Europe there's been a lot of good news from Europe, but it's not always going to be good news. So. And if you take me out 2 or 3 years, then I start to think that we really have to be looking at a lot slower growth.
Okay. Well, just a final word then. Sorry, final word. We have seen a lot of protectionism, not just from the United States. Brexit was, in a way, a deglobalization or an anti-globalization move. Even India has raised tariffs. Not so many, not noticeable, perhaps. I mean, what can allay this fear? What can prevent this? Or can this get worse?
Well, I think so far what we've seen is really pretty small change.
Okay.
It's not a big deal. And there's, as I say, there's enormous amount of vested interest in business in not going for heavy protectionism. But one thing I think we need to understand is that the general public everywhere has never bought into this elite view of the world, right? The Davos man, the globalist vision has never achieved a widespread popular legitimacy, even when it's right.
Yes.
And so there is a lot of risk here that just for the sake of seeming to do something, politicians will do stuff that disrupts the global economy.
Okay. So let's be prepared for red flags. Thank you very much, Professor Krugman, for speaking with us.
Thanks a lot.